Let me ask you a question. Have you ever been at a party minding your own business when someone drops a bombshell like, hey, the US might be heading into a recession? Now, I'm not saying that's how it went down, but if it did, you'd probably feel the same thing as when your Wi-Fi goes out in the middle of your favorite Netflix series. Utter panic. But guess what? The recession talk isn't just a rumor or some random comment on a news channel anymore. It's real, and the markets, they're showing it. Investors are running scared, and guess what they're running towards? Gold. Now, if you're wondering, why gold? Well, buckle up because we're about to dive into why this shiny metal is making a major comeback in the world of investing. Spoiler alert. It's not just because it looks good in your grandmother's jewelry box. Let's break down why, when everything starts feeling like it's on the brink, gold is the one thing people trust to keep their wealth intact. Here's the thing about recessions. They're like that one friend who always talks about how they're totally gonna get fit, but never do. It's one thing to hear about it over and over, and it's another to actually see it happen. The US economy has been showing signs of slow growth, and the numbers don't lie. We're talking about slowing GDP growth, consumer confidence dipping, and inflation hanging around like an unwanted guest. And guess who's noticing? Investors. According to reports from the Federal Reserve, yes, the big guys, the probability of a recession is now at its highest in years, over 60%. For reference, that's like getting a 60% chance of rain on your wedding day. Not exactly ideal, right? Now markets react to this sort of thing in a big way. The Dow, the Nasdaq, even the S&P 500, they all took hits. But this isn't just about a little market dip. This is about real uncertainty. And when there's uncertainty, people don't just hold on to their risky investments, they look for a lifeboat. And that lifeboat here is gold. Let's be real for a second. When you hear gold, you probably picture pirate treasure, medieval kings, or maybe the shiny jewelry your mom wears. But in the world of investing, gold is more than just eye candy. It's a safe haven, a place where people park their money when they're worried about the storm ahead. Here's the deal. Gold isn't just about buying a pretty rock. It's about hedging against things that could wreck your portfolio. You know, like everything we've been talking about, inflation, economic instability, and a potential recession. Gold is that safe and sound investment that doesn't rely on paper promises, government policies, or the whims of the stock market. So, what's been happening recently? Gold-backed ETFs, those exchange-traded funds, have been seeing massive inflows. We're talking about the largest flows since the 2008 financial crisis. That's not small potatoes. In fact, central banks around the world, including some in emerging markets, are stockpiling gold like it's going out of style. These aren't just investors looking for short-term profits. They're making a strategic move, positioning themselves for a future where economic uncertainty could be the new normal. Okay, here's a fun thought. Imagine your dollar bill suddenly started shrinking, like physically shrinking in size until it could barely buy you a cup of coffee. That's kind of what's happening right now, just in a metaphorical sense. For over a century, the US dollar has been the king of the global economy. It's the world's reserve currency, the go-to for international trade, and a safe bet for investors worldwide. But guess what? That's starting to change. Countries like China are starting to reduce their reliance on the US dollar. And don't even get me started on Russia. They've been offloading US treasuries like a fire sale. And if that wasn't enough, central banks are now stockpiling gold to protect themselves against a weaker dollar. It's almost like the dollar's title as the go-to currency is being slowly eroded. Countries are looking for an alternative, and gold is sitting there, quietly raising its hand saying, I'm available, folks. The implications? Huge. If the US dollar weakens, the US government's ability to finance debt could become more expensive. Plus, inflation could rise. But guess what doesn't get affected by inflation? Gold. The beauty of gold is that it doesn't owe anything to anyone. No central banks, no governments, just pure, shiny value. I know, you're probably wondering, how does this all tie back to my investment portfolio? Well, here's the kicker. The global financial system is built on credit. Stocks, bonds, real estate, basically anything you're familiar with in investing, depends on someone else's promises to make good on their obligations. But when those promises start to crack, things get messy. Take this. For years, central banks and governments around the world assumed that they could always print more money to stabilize the system. They could bail out financial institutions, lower interest rates, and keep the machine running smoothly. But here's the issue. This system relies on two things: low volatility and cooperative central banks. Guess what's missing from the equation now? Both of them. Now, instead of just buying into stocks and bonds, investors are looking at gold as their way to hedge against a much bigger problem. And that problem? Well, it's the fragility of the credit system itself. If you've ever felt like the stock market is a bit of a gamble, you're not wrong. But gold? It's not a gamble. It's a hedge against a system that could fail. Investors are waking up to the fact that financial systems, relying heavily on credit and debt, are more vulnerable than ever, and gold is the safe bet. This whole gold rush isn't just happening because of US instability, it's happening because of global instability. Let's look at Europe for a second. For decades, Germany has been the poster child for financial discipline. They've been all about balanced budgets and conservative fiscal policies, but now, well, let's just say they're starting to rethink their strategy. With the US in chaos, Europe's policies are up for review. Meanwhile, over in China, they're facing their own set of problems. Falling consumer prices, rising debt, and the looming threat of stagnation are pushing China to take a more aggressive approach to economic stimulus. But there's a fine line. Too much stimulus could inflate bubbles, and too little could lead to a hard landing. So, what's the global takeaway here? The world's three largest economies, United States, Europe, and China, are all dealing with their own economic challenges. And when all three are struggling, that's when gold becomes even more attractive. So, here's the takeaway, folks. This isn't just about a safe investment. It's about protecting your wealth. In a world where the financial system is increasingly fragile, it's not just about getting the next hot stock or riding the latest market wave. It's about making sure your wealth isn't wiped out when the system starts to crack. Gold isn't a magical cure-all, but it's one of the few things that stood the test of time. It doesn't rely on anyone else's promises, and it's not subject to the whims of central banks or political leaders. It's tangible, it's real, and right now, it's one of the best ways to hedge against the uncertainties ahead. So let's wrap it up with this. The markets are shifting, the United States dollar is losing its dominance, and the financial system is showing cracks. If you haven't already, now might be the time to take a look at gold as part of your investment strategy. Because when things get rocky, it's good to have something that's rock-solid. Now, if you're tired of these so-called stock market experts blabbing about the same picks over and over again, I've got good news. I found an investing newsletter that completely blows the competition out of the water. They find highly asymmetric stocks with low risk and high reward, the kind you'll never hear about on CNBC or other major stock market news sites. I'm talking about companies like Ukrainian agri-producers during a war, or Bank Handlowy in Poland, a solid bank trading at insanely low valuations. These companies aren't flashy. Many of them produce boring products or provide services in oil and gas, banking, and agriculture. But here's the thing, they make money. And by investing in stocks like these, you can too. For a limited time, they're offering a 30-day trial for just $1. But as a thank you for watching this video to the end, I can do even better. Click the link in the description and tell me your best email address so I can send you their recent newsletter for free. It comes with 5 stock recommendations as well as high-quality market analysis, so make sure you check it out. You've literally got nothing to lose.